All right, let's also get your conversation with Ravi Lambah, Joint Head of India at Temasek, on his outlook on things going forward. Listen in.
These investments were made some years back and as a consequence of our belief that these are long-term structural trends which will play out in almost every economy. And I think when I think about what's happening in India, as you rightly said, the crisis has accelerated some of the growth that some of these businesses would have normally seen over a longer period of time, but some of that growth has got accelerated. And as you accelerate growth, as you get adoption of such businesses, generally what happens is it actually does end up changing behavior. And so when someone starts transacting online, if they find it convenient, they find it as a good experience, and they find it generally something that saves them, that's more effective and efficient, it's hard to go back. And I think that's really what's happening. When you think about food delivery, food delivery has been around for quite some time. Zomato, for example, one of our portfolio companies has been here for quite some time. And as you see, as the lockdown happened and people still needed to get food delivered, it benefited. Similarly, the payment side benefits because as payments move online and digital, the payment businesses start benefiting. So that's kind of what's happening on fintech. And I think if I zoom out and think about financial services, financial services, we've been invested in the banks in India, for example, since we started operating here almost 16 years ago, and banks continue to be a significant part of our investment exposure in India, and I expect it will stay the same. Same meaning it'll continue to be a significant part of our investment because banks truly represent a great proxy for economic growth. India, there's a view that IBEF has suggested that by 2028, India is expected to be the fourth largest private wealth market globally, and that's a pretty big total market to go after in terms of wealth management, and that will drive different aspects of growth. So when we think about financial services, we think about that aspect. We think about banks. You pointed out insurance. We've been invested in insurance companies since for several years now. We continue to be keen to expand our exposure in insurance because we believe that insurance, credit are just very early in their phase of penetration, especially when it comes to the digital and the online space. So I think long term, we are positive on financial services. We are positive on the digitization of financial services. Banks are transforming, and we certainly want to be part of that journey.
Ravi, just a follow-up word. Surely Policy Bazaar, SBI Life, is doing very well. But within financial services, the pocket of lenders, especially the Bandhan Bank, the AUs of the world, even access to a certain extent, don't you see this part of the portfolio or space see hiccups or challenges in terms of asset quality because of what's happening in the economy? Or you have factored that in because many of them are raised funds properly and perhaps will be providing for it and they'll be able to ride this rough patch?
Yeah, I think it'll be unfair for me to comment on any of our portfolio companies specifically. But what I will say to you is that as you think about the impact of COVID on not just on the banks or the financial services companies or the tech companies or healthcare services, it is a temporary impact. And from our perspective as Temasek, we are very focused on the long term. So when we look at these businesses, we look at our intrinsic value test. We see what the valuation should be today. And as you pointed out, we factor in what goes into the intrinsic value, and that is all about country risk. It's about market risk premium. It's all the good things that go into valuation, and we come up with a view, and then we take that view based on a 3 to 5 year or a 5+ year outlook, and on that basis we feel comfortable that currently our exposure. We feel comfortable with our exposure. We feel comfortable with what we own, and we think that over the 3 to 5 year period, structurally, the Indian economy will continue to grow, and these businesses that we are shareholders of, or which we will hopefully invest in the future, will benefit from that growth. So I think at the high level, we're comfortable with the exposure we have, and we look for opportunities to grow it.
Sure. No, I was just referring to those names. I was not really looking for you to comment on it. But anyways, let's move on and talk about the healthcare space. Again, this is a space, at least in the listed space, be it diagnostics or pharma companies, getting completely re-rated, in many ways, and some justifiably, perhaps some, are factoring in far out earnings now. How are you looking at this entire healthcare space, hospitals, diagnostics, and select pharma opportunities, like biosimilars, etc.? You look at it closely. Do you see we are coming out of a 4-5 years of weakish patch when nobody was ready to look at this space at all, and now people are recognizing the merits, or perhaps structurally things are looking improved?
Yeah, that's another good question, and it's very close to our heart because we have a strong focus on healthcare and life sciences. If I can build that together, in India, we've been invested in the hospitals here for quite a long time. Our first investment, almost 8 years ago, was in HCG out of Bangalore, an oncology chain, as you may know. And since then, we've put more capital to work. We have invested in Medanta. We're invested in Manipal. So these are some of our investments in healthcare services. At the same time, we were investing in pharmaceuticals too. We're invested in Intas Pharma for more than 6 years now. So these are long-term investments for us because we do think, again, I mentioned our trends before. This investment in healthcare life sciences fits very well with our other trend, which is longer lifespans. We do believe that the world and human beings will see longer lifespans, and that is a global trend that we're investing alongside. And when I think about India, you think about the fact that, the healthcare market here in India, again, IBF has some quotes. We have our own estimates, but IBF is saying this could be a 133 billion market in 2 years from now. And that's a pretty big market. And healthcare spend just by the government alone is being forecast by them to grow from 1.3%, which was in FY16, to about 1.6% in 2020, and it's going to be closer to what they're forecasting, they're closer to 2.5% of GDP by 2025. So you think about the healthcare spend by the government, you think about the need for healthcare services, and then you think about the sheer demand and the quality of healthcare services that you can take India to what I would call the development of this service to a much higher level, and there is a great demand for it. So we are behind this trend. We like it. We are investing in it. We have a healthcare services platform called Shares. Shares is looking to grow the exposure, in India and a few other countries like China. And I think we will continue to see the emergence of India, as you referred to in the CDMO space, the contract development and manufacturing organizations that we see, and that's where a lot of scientific talent in India is spending time trying to create globally competitive companies through R&D efforts. So I think you hit the right point. These are trends we like, and we are looking to put more capital behind them.
Consumer. Let's talk about the consumer, which is badly hit right now. Disposable incomes are down, and the focus of any consumer, be it institutional consumer or even retail consumer, citizens, are focusing only on essentials. Whereas, the valuation in the listed space continue to remain sky high. What kind of chats are you having with your portfolio companies in consumer space? How are they going about reinventing or reshaping their business models? What's their own demand trend studies showing? How bad is the situation on ground? If you could share some insights.
I mean, domestic consumption has equally been the biggest driver for our investment activity in India. And domestic consumption has traditionally been around 60% of GDP. So we think this will, over the medium term and then to the long term, we remain very positive in this space on the trend of consumption and in the consumer space. I think you quite rightly said COVID has had a severe impact on some of these businesses and some of these industries, that discretionary spend has not come back. Non-discretionary, essential spend continues to be robust because people need to eat, people need to live, and that's what it is at right now. But at the same time, I think the stress in the system comes from a couple of things, right? Stress in the system.
All right, Ravi Lambah there of Temasek India, talking about how the COVID crisis has accelerated growth in selected digitized business models, pharmaceuticals, hospitals, as well as opportunity in banks is what he sees, and bullish on the agri supply chain as well as the agrochemical sector.